Hey, y'all. Today we are talking about non-warrantable and non-warrantable condos and everything non-warrantable, really. I have Brandon Sparks with Nautilus Lending, and Brandon has done deals for me in the past, and he's got over 20 years of lending experience. And y'all know me, I'm pretty detailed when it comes to lenders. He lends in Texas, Tennessee, and in Florida. He graduated magna cum laude from St. Edwards. I mean, hello, he's smart too. Brandon does traditional lending and just about every kind of loan type out there, but he also is the perfect guest for today's episode because he's brilliant with those portfolio niche lending products that fit that out of the box type of financing, such as non warrantable condos. And we've got a lot of those out there and sitting around, and not every lender can handle those. Brandon can. So thanks, Brandon, for joining us.
Oh, thank you so much, Robbie. This is an honor to be a part of this today. Thank you.
We're glad because one of the things that I have learned teaching condominium classes as well as doing deals with other agents is they don't know what the heck a non-warrantable condo is or why I need a financing letter from a lender who can do a non-warrantable because they'll show up with a regular traditional Fannie Mae
Right.
pre-approval letter. And I'm like, yeah, that ain't going to work.
Exactly. Let me give you a semi-technical answer in terms of what this is, what non-warrantable is.
Okay.
So this comes from your traditional lending on a property in terms of underwriting. So we're talking about traditional mortgages, which would be your Fannie and your Freddie. All right.
Okay.
And Fannie and Freddie, for those of you who don't know, they're massive clearinghouses for lenders that are in the business of making loans and then selling them off of our books to complete the life cycle of the mortgage process.
Secondary market, right?
For secondary markets, exactly.
Okay.
So we underwrite the borrowers, but we also underwrite the property, which is that collateral for the loan. So this allows us to sell the mortgage to that secondary market, as you mentioned, as an investment. Okay. This mortgage that people are taking on the property, it's a bond investment after we close the loan. The mortgage rate that consumer gets and the loan program that we can provide, those are influenced by various types of perceived risks. Okay. So a condo represents a slightly higher perceived risk than a single family. And that's just because of how that development structure was laid out. Condos are often very similar to each other within a project in terms of the physical layout, the
Mhm.
space between the walls, the ceiling, and the floors. And additionally, the HOA rules of that community will play a big role in how the performance, how those duties are upheld in the community. And that can affect those condos financially and the ability to maintain them and the spaces around the property, those common elements. So eventually, Robbie, that will influence how the resale goes. That's the technical answer. So condos do fall within underwriting purview of warrantable versus non-warrantable. Condos can be mainly your attached condos, those 2 to 4 units, the towers, you can even have detached condos that have aspects about them, like land condo structures. But we underwrite about 30 aspects of the condo project. We gather that information about the project from the HOA on a condo questionnaire. And that's a
Right.
form. It's usually completed by the HOA most of the time. And if one of those 30 some odd aspects fails to fit within Fannie or Freddie's risk standards for the underwriting, the
Mhm.
purchasing standards, that buying investor will not purchase the loan.
Can you
So,
give us an example that you might commonly see?
yeah, one that we're experiencing right now is structural litigation. If
Okay.
there's a particular project in town, there's litigation on a common element. It's a big deal. They're close to settling. They've been working on it for quite some time. And most lenders out there across all of Texas, at least, will shake in their boots over it.
Yeah.
That's a pretty big deal. Like for us, when we close your loan, we need that secondary investor 100% on board, well in
Right.
advance, right? Because if they won't legally represent and warranty the purchase, or in layman terms, give us the necessary assurances that loan purchase will consummate, which is what we need, then a lender gets stuck with that loan on their books. And many of the big banks and mortgage lenders or brokers simply do not have the ability to keep these loans on their books for the 10-year, 15, 20, 25, 30-year term. So this is why many of these lenders who live and die on selling loans to these secondary markets, they just will not make these loans.
Is that what we traditionally hear called a portfolio loan?
It
One
is.
they hold
Yes.
within their
It's
own.
held within the portfolio of the institution. That is correct.
You and I originally met on a condominium complex dealing with the financing, which was a hotel, and the developers went in and converted them to condominiums. And
Right.
I had a buyer that just absolutely would not listen to reason. And on his second deal in there, we were able to contact you because he had a mortgage person he wanted to go through. And she said, "Oh, yeah, I can do it. Oh, yeah, I can do it." And she couldn't, and had to listen to reason, but it cost him.
Right.
And you
Right.
jumped in and were able to get that deal done. And is there an easy identifiable thing that helps us as real estate agents to say, "Hey, that's a non-warrantable. I need to call Brandon."
I would love to say that there is an easy way. You can't easily often recognize it without hearing about the failed attempts to finance the property from maybe other agents,
Right.
the HOA, or the property seller. I would say you need a specialist who has the experience with just the nuances of condo lending in general.
Okay.
Okay. And you need that accurate condo questionnaire produced by the HOA for us to review and confirm whether or not the property is warrantable. Because you got to remember, these things can happen. You can have a property go in and out of warrantability, and there's no real bell that rings to let you know that's been the case. So, if I were looking at a condo as a buyer agent, and I'm not an agent, but I'm just thinking in
Right.
terms of putting myself in those shoes, the first thing I would do is reach out. Hey, Brandon, let's talk about the financing terms and expectations
Right.
for this process in the event you come across the right property that might become a non-warrantable property. And now, if I was listing the property, I would encourage the seller to spend the money in advance to complete a condo questionnaire and then reach out to us to review it and ensure that property is in the right status. And of course, we can give you the forms in advance.
Because when it falls out, it's late and frustrating to have to deal with trying to get lending a
Yeah.
second time. It does get very frustrating. It's a
Yeah.
good advice there to reach out, especially when you're doing a listing upfront.
No, I agree. The last thing you want, in this experience that we provide, which is rooted in good customer service, is to have something come in and get deal fatigue and create that deal fatigue early in. That's commonly we're coming in as a lifeboat type of thing.
Why would I, as a real estate agent, need someone who specializes in a non-warrantable type property instead of just the traditional one? But why do I need someone that specializes in that?
I think the last thing you want to experience is getting weeks into a contract and the lending process and then finding out that underwriter is going to prohibit the property for that particular loan or getting an appraisal, spending all that money and wasting your time, charging up the emotions. I mentioned deal fatigue. It's for everybody involved. It's like being on an airplane and then you feel real big turbulence. You're really worried. Is this going to come down? We don't want that experience for the client. So if you do have a client who is interested in the condo, I just think you need to have that expert who can handle traditional condos, FHA approved condos, VA approved condos, non-warrantable condos. It's
Yeah.
important to note that conventional VA, FHA, all of these, and also non-warrantables, they carry very different underwriting requirements. And I'm talking about vastly different in terms of not just what we qualify, but the mortgage rates and the loan terms. So over the last 20 years, we really fostered this niche for about 17 of those 20
Mhm.
years. So we've got the experience to easily fund any of them. We have loan products for all of them. And this will provide you and your clients with that security, that confidence, no matter what, we can get that transaction closed with the best terms where legally possible. That's the key here. That's the key.
Yeah, you mentioned warrantable list. FHA, I know, has one, and
Correct.
VA has one, but it seems like those lists are shrinking. It doesn't seem like a lot of complexes are renewing those.
Right.
And so it there's a bigger need. And one of the things, we're in a college town, of course, and we've got a lot of those condominiums that are out of whack with that owner to renter
Right.
percentage, and they have their own challenges in there.
Exactly. Yeah. And like you said before, there's not just one what makes it all work. There's not just one. There could be a whole slew of things that, that pop up in that
Right.
underwriting, like occupancy percentages. That depends on whether the condo is established or is it a new condo. All of these little nuances will play in.
You said there were like 30 of them that y'all look
Or
at?
less,
Yeah.
yeah, 30, 40 of those on the checklist.
Are there any special considerations or potential changes that borrowers should really be aware of when seeking some type of non-warrantable financing?
Sure. I would make sure that we fully discuss the details as early as possible and like prior even to making the offer. This is just a good standard in any transaction, having good communication with the buyer and the seller side. I think
Right?
setting these expectations early, that makes the experience a win-win for everybody. On any condo transaction, the loan terms will depend on the issue with that project. So these are issues that I can discuss and actually socialize is the term I use with the investor.
Yeah.
So means that your traditional 30-day closing may not be possible, right? You
Okay.
might need a 40-day close or 45-day close. And so we'll need to negotiate maybe for a little more time, but that's always better to do early and get everybody on the same page with good communication. That tends to calm the nerves. And so getting
Absolutely.
those details and having that solid loan application in hand with those details about our borrower, that's going to be a big deal. And I want to make this note because you'd mentioned portfolio, and I want to say this. So these loans aren't going to be sold. Most of the time, they're not sold. All right. So the
Okay.
investor needs to feel comfortable with the perceived risks. And because they're going to keep that loan on their books for the life of the loan. And you cannot assume that a buyer will qualify for this type of loan just because they qualify for some other traditional mortgage with those debt ratios. We might require higher down payments. We might have a shorter loan term. We might have higher closing costs for these purchases or refinances. It's really important that we discuss these things very early in so that we're setting those expectations.
Those are awesome points because that really can affect what someone is looking to do when they fall in love with that complex. If you haven't gone and worked with a lender that can do non-warrantable as well, you have to be able to flip and pivot and adjust everything.
Absolutely.
What other loan types or programs would I want to consider directing your way? And I always try to get someone not to do the huge national banks
Yeah.
or anything like that
Mhm.
because everybody likes someone who's going to pick up the phone. And
Yeah.
Brandon picks up the phone.
Yes, sir. Absolutely. Or a text. And I'm a dad, I've got a 10-year-old little girl. So we're on the weekends where we are spending family time. It's often I'm still texting saying, hey, let me get back with you in a couple hours. And we understand how real estate works. It requires sometimes we're working holidays and weekends. And we're passionate about this. We've done this a long time. So absolutely. But to answer your question, and I really appreciate this so much, Robbie, to be able to talk about the other stuff that we're doing. It's extremely common that we get brought into a deal the same day with non-warrantable lending. And that's after it's already started with another lender. But as much as we love coming in as the Navy SEALs of lending to get these tough deals done, the reality is I've positioned our branch to be able to fund in all the loan categories. So we hope to earn your business with this kind of education for the clients and great communication, supporting you, the buyer, and or the seller, right? Within experience, because we are advocates for this transaction, right? We want a smooth transaction where we close the deal. And we hope that referral partner can see that and consider us for regular traditional loans. So we'll keep it simple, understandable, we'll work to get you guys the best terms that are available in the entire market. So, just some examples: we do low down payments for first time home buyers, so 3 to 3.5% down. You guys have heard of FHA loans. We do those.
Right.
We can also do 100% financing. So that's great for those first time buyers. We're doing those. We're doing those for veterans. There are certain rural properties that we can do zero down. We love seasoned investors. So we have special lending programs for self-employed borrowers who have aggressive tax strategies with write-offs, right? So
I'm
we
sure.
do a ton of realtors loans, a
I
ton.
bet.
We had 6 in the last 45 days.
I bet.
So it's very common. Commercial lending for all types, multifamily apartment lending is available. Land loans, lot loans, construction loans, and even construction to permanent loans. So we can close them 2 times or we can close them 1 time. In fact, just so you know, when I started 20 years ago, my first niche was in construction lending. That's where I began everything before the non-warrantability was a thing. So
Yeah.
that
Construction.
we're a full service shop.
So, Brandon, if somebody wants to reach out to you, how is the best way that they can contact you?
I think the best way is to reach out two ways. First way would be Brandon at
Okay.
Nautilus-Lending.com. That's our email. What we will do is we will set up a strategy call because I think it's all about taking in information, listening to the client's needs, taking notes, and sharing information about the market and the loan product and the process. So it always begins there. You can also text me at 512-796-4569. Again, that funnel is going to lead you directly to getting into the calendar where we can both sit down. We can Zoom, we can make a phone call. I can talk to you about your financing needs, your goals, and help you work through all of that information. And then from there, we go to application. And I build those step by step process in a very simple, easy to understand way.
That's awesome. And Brandon's contact information, in case you missed it, is going to be in the show notes below. And thank you, Brandon. This is
Thank you,
going to
sir.
help a lot of people. I'm glad that you took the time to join us. I appreciate it.
I'm honored. Thank you so much. I really appreciate it.
Thank you. Thank you for tuning in. We're dropping new episodes every Sunday at noon Central Standard Time. We'd love your support for The Real Tea with Robbie English. By giving this video a thumbs up and subscribing to the channel, it would really help us out. Be sure and share it with your colleagues and friends, and until next time, we hope you have a profitable and productive week.